Well, good morning, everybody. I'm Ed Parcaut, and this is Real Estate Jerky Daily. Mike Kelly is in Oakdale at the Christmas Cantry, doing his part like he always does for the Realtor community and helping out the affiliates. All right, today, the only report really out today was the ISM manufacturing, and it came in as the same that it did in October at 46.7%. So it's still in line with what they were expecting, and it's still showing contraction in that sector, which is we had many months of, I think it was 28-month period of growth, and then it started retracting, and that's what it's still showing. So the economy is getting worse out there, kind of what we expected, and I don't want to say we hope for, but that's kind of what we're hoping for to get these rates even down further. Currently, right now, the we're, we're at like 10 basis points on the bond market, which means rates are a little bit better, and that's what we want. I'll take a little bit every day because it adds, to 10 up 10% today, or 10 basis points in 10 days is 100, and that's really good for us. So rates continue to decline, which is what we want to see. So get ready. We're at that tipping point, we're hoping, because it's all going to depend on how the retail sales are in December for the Christmas. So if everybody opens up their wallet and puts everything on their credit card, we might see the bonds jump a little bit the opposite way, give back, and rates get worse. But I think we're going to see long term that more and more people are not paying their credit cards. More and more people are not going, it's just getting harder, and it's finally hitting them. All right, what else is out there today? We're waiting on basically what the Fed's going to do for the next time they come out. Fed's policy, they've been tightening, as we all know, and each half of them are saying we're good at what we've done so far. We need to probably get ready to lower it, no longer raise it, but actually reduce it. And then half of them are saying, no, I think we need to stay here and go forward. Well, that's okay. I'd rather have them have a balance in there than just one way or the other, like they did when they raised it. And that's why we went up 5% in actual interest rates. Anyway, what's going on? So CoreLogic, they looked at loan performances of mortgages. And even though we're at the very lowest, where delinquency is for 30 days or more increased marginally to 2.6%, from 2.6% to 2.8%. That's hardly anything. The rate of loans delinquent for over 90 days stayed consistent at 0.9%, which is like the lowest in 25-year history in the foreclosure route. What does that mean? We're not going to see this huge bubble. We're not going to see, everything is showing that we are in good position. We talked about it earlier this week that things are still right. We're seeing a 6% increase in housing prices this year. And everybody said we're going the opposite way. We just slowed down the appreciation of homes. We didn't go negative on that. Next week, we got some major reports coming out. We got JOLTS data will be out on Tuesday. I know, Mike Kelly loves that one. Wednesday is mortgage applications, ADP employment. Thursday's again initial jobless claim. It's always Thursday. And then Friday is the BLS report, which will give us some real numbers on what's going on with the economy and unemployment. Bottom line, my Barry Habib, everybody listens to him, and if you don't, I'm sorry. He's still saying float, because we're going to get better, and I see that. That's kind of what I'm seeing. But we've been here many times in the past year and a half. Everybody says by June, by whatever, and that's just not happened. But I think we're finally here. So all I want to say is this: go out and buy a house this weekend. Instead of spending all this money on gifts and everything else, give yourself a house, give yourself something for your future. And if you're a parent and you want to help your kid out, you can always help them with a non-occupant, where that you actually have them buy the house. You're on there as a co-borrower, a non-occupying co-borrower. That means you're not going to live there. And then after 12 months, as they've made the payments, that is not held against you. But, you could always go in with them, meaning that until you get them off, you help them out, you go on and said, until you can refinance and get me off this loan, we're going to share the equity. That's a win-win for everybody, because that way you don't have to go buy a house and worry about renters. You got your own kids in there. All right, that's all I have for today. Again, go out. There's the kettles all over the town. Go put some money in one of the kettles, help out Salvation Army. If you're in Oakdale, stop by the Cantry, help them out. And again, if you need anything at all, you can reach out to Mike or myself. I'm Ed Parcaut everywhere. You can get a hold of Mike Kelly through Instagram, everywhere. Through just give him a DM and he'll reach out to you. All right. Make it a great day. And thank you so much. And we'll be back here on Monday.